PMI still confuses many borrowers.
3 misconceptions. First one is that it's permanent. We know that it's not permanent. The next one is that it only benefits the lender. It can be expensive. The cost of MI has been on a downward trend. PMI is that it's a tool, a bridge helping a borrower go from tenant to owner, temporary stepping stone to help folks get into home ownership faster, start building equity faster, start building, accumulating wealth faster.
Hi everyone, Serena Diaco here, and welcome back to the Digest by AD Mortgage, your trusted source for insights into the mortgage industry. Today, we're unpacking one of the most misunderstood parts of the lending process, private mortgage insurance, or PMI. Joining us is Albert Martinez. He's an expert who's helped thousands of brokers turn complex financing conversations into client confidence. We'll talk about what PMI really is, how it differs from FHA and VA fees, and how brokers can use it not as a barrier, but as a tool to help more buyers achieve homeownership. Plus, we'll explore how MI flexibility is reshaping affordability in markets like South Florida. Let's dive in. Hi, Albert. Thank you so much for being here with me today.
Absolutely, Serena. Thanks for having me. Appreciate it.
Yes, of course. So let's start off with the basics.
Yes.
PMI still confuses many borrowers, many of our loan partners. How would you describe it in easy to understand way?
Yeah, so I can see how it can confuse people. There's so many different types of insurance involved in the home buying process, right? So let me try to help by explaining what PMI is. So private mortgage insurance, also known as mortgage insurance. Some people call it MI for short. Think of it as a tool that helps enable borrowers qualify for mortgage financing with as little as 3% down, while protecting the lender against the default risk involved with low down payment mortgages, right? So one thing to keep in mind is that the cost of MI is usually passed down to the borrower. So it's important for them to understand what MI is. So what we've done is we have created on our website, essent.us, a borrower-facing subpage where loan officers, brokers can point their customers to. And the site does a good job of explaining what mortgage insurance is, what the benefits are, what their rights are as consumers. And so if I had to concisely describe mortgage insurance in one sentence or less, I would say that it protects the lender while allowing borrowers to refi with less than 20% down.
Great. And how would you distinguish this between the FHA MIP fee, the VA funding fee, and now we have PMI with conventional loans?
So with conventional MI, 3 things come to mind. The first is that it's risk-based. Second characteristic of conventional mortgage insurance that comes to mind is that it's customizable. It's not a one-size-fits-all. And then the last thing is that it's cancelable, right? So if we talk about risk, it's risk-based, meaning that it's dependent on the overall profile of the borrower. The fact that it can be customized, meaning it could be broken up into an upfront premium, monthly premium, or a combination of the two. And then the cancellation aspect makes it unique because borrowers can initiate cancellation by reaching out to the lender, servicer, requesting cancellation once the equity position reaches at least 20%. When I think about FHA, mortgage insurance premium, MIP is what it's known as. That for the most part is not cancelable. It's on there for the life of the loan. And then MIP is not customizable. It is one size fits all. In terms of VA, it works a little different. It's a funding fee. It's actually not mortgage insurance. And so while all 3 options are great options, they're not for every borrower, so borrowers can choose. And if I'd have to describe the conventional offering, it's probably the most dynamic of the 3.
During the loan process, could my MI change if let's just say I was the borrower and I was to improve my FICO score? Could my MI technically go down if I was to run it again during the loan process?
Yeah, it could go down or it could go up, right? So it's risk-based depending on the overall risk profile of the borrower. And so it could potentially change. Yes, that is correct.
Okay, great. And, we've heard mortgage insurance maybe be a barrier, maybe it's a benefit, right? Yeah. It's almost like a bittersweet thing. It can get you into a home quicker, or it could maybe be a barrier for some when it comes to DTI and how it's being factored into their monthly payment. What do you think overall about that?
Definitely not a barrier. Okay. One thing you can think about as it relates to mortgage insurance, right? PMI is that it's a tool, right? Like you mentioned, it can also be seen as a bridge, right? A bridge helping a borrower go from tenant to owner. And it can also be seen as a temporary stepping stone to help folks get into home ownership faster, start building equity faster, start building, accumulating wealth faster versus renting and potentially waiting to save up for a 20% down payment and purchasing tomorrow instead of today.
How can our partners, our broker partners, how can they turn those, your comments into trust building moments? So, really advising their borrower that this is not a setback.
3 misconceptions come to mind. The first one is that it's permanent. We know that it's not permanent. The next one is that it only benefits the lender. We know that's not true. And then the last but not least is the fact that it can be expensive, right? So if we break those down into, trust building moments, we can have, someone sit down with a borrower, with a consumer and talk to them about what the different cancellation options are in terms of MI. The other thing we can do is talk about the fact that mortgage insurance has been on a downward trend for the last several years, right? Where other fees and insurance has gone up in price. The cost of MI has been on a downward trend. And then last but not least, demonstrate the value, or I should say the cost of waiting to purchase, right? The cost of renting and continuing to try to save for that down payment instead of buying today and starting to build equity today. One thing that we've done is we have built a tool. It's called Essent IQ. It's available on our website 24/7, no credentials necessary. Loan officers can access the tool. With 10 data points, we're able to generate a feedback certificate that is co-brandable. So the loan officer can include their contact information as well as one of the realtor partners. And with this feedback certificate, we're able to clearly articulate the cost of waiting, the opportunity cost of not buying today and potentially waiting to someday buy in the future, right? And so that's Essent IQ. It's available on our site. If anybody wants to access it, feel free to check it out and let me know what you think, Serena.
How do you think that brokers can leverage MI pricing just for some more flexibility and competitive?
We talked about the fact that mortgage insurance, PMI, is not one size fits all, right? It's customizable. So maybe the borrower is not comfortable with carrying a monthly payment. Maybe they'd rather pay an upfront single premium payment, right? Or they can combine the two. They can do a monthly plus a single and then mix that up. And like I said, it is very customizable for the borrower. Now, in terms of the single premium, one thing to note is that that single premium payment can be paid by the borrower, by the lender, by the seller, by the builder, or even home buyer down payment assistance can be used to pay for that single premium as long as the interested party contribution limits are met. Okay, so one example of a single premium that we see sometimes is an 85% loan to value. Those monthly premiums sometimes are kind of small, so borrowers sometimes elect to go with a single premium, right? An upfront single premium, and just eliminate the monthly payment for the MI altogether.
So Albert, in what type of borrower profiles do you see PMI as an advantage? Is it self-employed, maybe first-time home buyers?
So the first one that comes to mind is the most common, which is the first-time home buyer with limited savings. Next is probably that self-employed borrower with good income but limited savings. You also have investors, right? Investors, folks that have money in the market where they just don't want to liquidate their investments for a down payment. And the last one that comes to mind right now is those FHA loan limits can be limiting, where conventional loan limits are going to be higher and potentially help in that potential, in that scenario. The other thing that I can tell you is that we have a next generation pricing engine that uses traditional credit and evaluates up to 400 different data points to ensure that borrowers get our best price based on their traditional, overall scenario.
Very cool. It's great that Essent gives borrowers the tool to do that because they wouldn't know. And I feel like a lot of borrowers may not even know what mortgage insurance is. They see their monthly payment, they're told that this is what it is, and they don't even know that there's an option or that they can research or explore or use these pricing engines to help them get a quote, see if it's actually cheaper, more affordable.
Yeah. Yeah. And so usually the quotes are done by the mortgage companies, the loan officer or the broker. Borrowers don't necessarily have access to
Okay.
our pricing engine, but they can definitely go through their lender for that.
Okay, good to know. You kind of mentioned that MI is on a downward trend. Maybe not slope, but a little bit of a trend, right? So are you seeing any other trends in the South Florida market regarding affordability today?
Yeah, so affordability continues to be tight in South Florida. We're seeing, home price appreciation when it's done in the last few years. Homeowners insurance is on the way up, property taxes as well. And so the role of MI is to help facilitate, those loans with less than 20% down, to help people get into those homes with as little as 3% down.
To finish us off, if you had to give one piece of advice to our clients just to help client-friendly conversations regarding PMI, what would it be?
I would say to keep it simple because it can be confusing. I would use the analogy that we talked about earlier, the fact that it's a stepping stone, right? It's a temporary stepping stone to get borrowers into home ownership faster so they can achieve that goal in their life, right? And start building equity, start accumulating wealth faster instead of maybe buying one day in the future.
Thank you so much for being here today, Albert.
All right, thank you. Loved it.
PMI isn't just another line item. It's a bridge that helps more families get into homes sooner and build equity faster. For brokers, mastering that conversation means turning confusion into trust and transforming objections into opportunity. Now we want to hear from you. Do you think PMI is a barrier or a tool for opportunity? Drop your thoughts in the comments below, and remember, tools like the AIM Partner Portal make it easy to compare options, quote faster, and deliver clarity at every step. Don't forget to like, subscribe, and hit the bell for more expert conversations. And until next time, take care, stay informed, and let's continue growing together.